Our starting point tonight is in African capital markets. 2023 has been a pretty volatile year for that particular space. The all-share index in South Africa, for example, that's down nearly 5% so far this year. And relatively speaking, it's the better one among the lot. Kenya's NSE 20, for example, that's down by nearly 13% in just 10 months. Indices in Nigeria and Egypt have gone up fairly sharply this year, by more than 50% in fact. But in some cases, it's more of a reflection of investors seeking some measure of capital preservation, particularly in the case of Egypt, where inflation is in double-digit territory. Now, currencies have really fared no better, especially at a time when the Federal Reserve has raised policy rates to levels that we haven't really seen in decades. Nigeria has embarked on painful but necessary moves to end capital controls and let the naira find its true value. And that is reflected in the 75% fall in the formal market, which has helped to close the gap between rates there and in the parallel market by quite a significant margin. Egypt did devalue the pound a little earlier in the year, but authorities there have refused to let it weaken any further, especially at a time when inflation is well over 40%. In nothing else, these grim statistics, pretty much everywhere you look, there's an indicator that is flashing red. All of them will provide some interesting talking points when at least 30 finance ministers and central bank governors meet in Togo in mid-November for the African Financial Industry Summit. A little earlier, I spoke to Ramatoulaye Goudiaby. She's the summit's director. I started our conversation by asking her if the partial withdrawal we're seeing by some Western banks from some African markets represents a significant growth opportunity for African banking giants.
There is an opportunity which is open to all the local players. We have BNP Paribas, Société Générale, Standard Chartered. They have left the continent. And this has given the opportunity to some players, local players, such as Vista Bank, such as Coris, such as, on the Francophone side, but also on the Anglo, I've seen Access opening a branch in France to strengthen his franchise to the Francophone area. So thank you to those international players. They have left the continent, giving the opportunity to our local player to strengthen their franchise and to gain these, what we call these critical size to compete internationally. The second thing, and what you're mentioning, because of these liquidity issues, we need to have a mobilization of domestic institutional investors, because African sovereign wealth funds, pension funds, and insurance companies have over 1 trillion in assets invested in government bonds and foreign assets, while Africa capital markets suffer from a lack of depth, annual funding shortage of $107 billion, for instance, to finance its development and energy transition. So this is hindered by regulatory restrictions first, a lack of quality investable assets, and currency instability, as we mentioned earlier.
And that goes hand in hand as well with the continental free trade area, doesn't it? Because on one hand, we've got this massive, ambitious plan to say, let's break down trade barriers across the 50-plus economies that essentially call Africa home. Side by side, along with that, we also need to do the exact same thing with capital markets. Yes, we've got issues around currency. Yes, we've got issues around regulatory divergence. But it's something that we do need to work towards.
We need to work on it. And what I appreciate and what I saw last year is the achievements such as the successful deployment of the Pan-African Payment and Settlement System, PAPS, or the launch of the African Exchange Linkage Project, AELP, which enabled the sovereign stock market to interconnect. And I believe that these are added value to the financial industry across the continent. And AFIS is actively committed to contributing to the success of this AFCTA, which is expected to accelerate the integration and growth of the African financial sector. At a time when the cross-border trading is high on the agenda of the AFCTA, PAPS, which is an African-built and controlled infrastructure, is primed to facilitate the expected increased volume in cross-border payment. It will enable the efficient flows of money across African borders while minimizing the risk and contributing to financial integration across the region. When Michael Balu came to AFIS last year, it was for one reason: to meet the central bank governor, present during the summit. So the central bank governors from Ghana, from Kenya, from Rwanda, from Zambia, in order to start a collaboration to provide a payment and settlement service to which the commercial bank, the payment services, but also the fintechs all across all the continent can connect as participants.
One of the fun topics I remember from last year's event was this massive debate that erupted around tokenization of assets and where crypto fits into the wider conversation around, making payments easier. And some of the attending central banks, Ghana, for example, have been experimenting with CBDCs, so has Nigeria as well. Will that still be a central focus for this year's event?
Actually, yes. We have a disruptor club, and there is always topic related to the fintechs. Fintechs are key, and interoperability with banks is key today. The topic for this year is, can deeper banking partnerships sustain the fintech golden age? And it was decided after the collapse of the Silicon Valley Bank, which show a lack of liquidity and increased regulation have rung alarm bells that the African fintech golden age is fading out, with the value of African fintech funding declining 60% year on year in the first semester 2023. So deeper banking partnership in payments, open banking, digital identification, blockchain and retail and SME lending could provide fintechs a new lease of life.